Namaste and warm greetings to one and all. Let us have a very nice and a comfortable time with regard to the goods and services tax. I think it is a very known fact that since 2018, this GST Act has turned the entire business and scenario, the life of businessmen, professionals, into not very complex but a challenging one. So I will give you a lot of series of videos on this GST to make you very comfortable on your syllabus for your intermediate curriculum of all courses, your CEIs, AACS or MCOM, whatever you say. I'll say to that you are very comfortable in your GST topic. Let me begin my lecture with the over of GST and the model and the levy of taxes. I will not be discussing on the history or transition of GST because from any material we can learn about the history or any part, and that is not required also because it has come into force. We'll have to face it. Let us face the music of the GST ecosystem. So when you say about the GST ecosystem, it starts with the GST Council. The GST Council is the higher, the administrative authority who have been who have been given powers to implement or to take policy decisions on this GST. It is headed by the finance ministers, and the members from the various states and union territories are the finance members. So they meet frequently and take certain decisions on the issues related to GST or how to proceed forward. And they are assisted by the Accountant General, the C&AG in India, the government accountant, we need to call him the Accountant General, who maintains all government records and other books. So the C&AG gives a functional support for the framework along to the Ministry of Finance and to the other stakeholders. Then the GSTN, the GST network has been set up. This GST network is a company, Section 25 company under the Companies Act of 1956 and Section 8 company in 2013 Act. They have been formed with an objective of to support with the infrastructural requirements for the GST. So they connect the GST Suvidha providers, the GST practitioners, and the GST common portal are being coordinated by them. And then we have got help desk which is being set up by the Seva Kendras are being established by the government, the professional bodies to assist the stakeholders and the traders in this regard. And then we have got facility centers, your common service centers. They help the taxpayers along with the tax return preparers and the auditors. They all help the taxpayers to register, to file the returns, to pay the taxes, to comply with all the compliance norms under GST. The Suvidha providers or the common service centers, the tax practitioners, your tax return preparers, your auditors, your professionals, all of them they support. So their support is also linked with this GST common portal, and with the help of GST network, they undertake all the activities. Then we have got the regulators. The regulators are the respective states and the central. The states for their state taxes and the central for their central taxes. So in the state we have got all the state revenue departments being merged. The commercial tax departments are being merged into this common portal for administration. And the Central Board of Excise and Customs, your central authority for excise and customs duties, are also merged under this. Your app providers, even GST can be filed with the help of apps and your SMS services. So all these are being linked with the GST system, your mobile operators, your service providers, and then your UDAI, Unique Identification Authority of India, your Aadhaar authority. They are also linked with this GST network for the authentication and obtaining eKYC. Know your client or know your customer norms. Like physical papers are being dispensed of now. with the help of Aadhaar, with the help of your biometrics and demography, we are able to validate the data. And then your PAN, TAN tax details are being interfaced, and it is being verified from the respective database. The banks are under the GST network for collection payment of taxes through net banking or your challan payments or your RTGS, NEFT. And then finally the Reserve Bank of India, which functions as a treasury for collection of the tax money. It is there in the GST system. So when I call the ecosystem, the entire environment, we have got many providers who are listed here, and apart from that, there are many departments which are connected with the GST system now. Now the constitutional levies, the Constitution of India, it gives powers to the center and to the states to collect certain taxes. So the central taxes in the earlier regime, before your implementation of GST, excise was collected by the central government on manufacturers. Yes, it is subsumed in the GST. Central excise is no more in place. Customs Act, only basic customs duty are available nowadays. The other taxes like your countervailing duty and special additional countervailing duty are being subsumed into the GST part. Your service tax, which was implemented in the the earlier of 90s, that is completely being subsumed, because the tax itself is called as goods and services tax. Central sales tax, CST, when you had your interstate trade or commerce, the tax which were levied on the interstate transactions are now again covered under GST in the name of IGST. Your state laws, state VAT is completely subsumed because it was levied on your goods. State excise duties are being subsumed with the exemption of liquor. Your alcohol for human consumption is kept out of GST as of now. Still it is covered under your state laws. Similarly, your petrol is also covered under the earlier laws, and it is kept out of the GST. Petrol and 5 products. The date of notification will be known at the earliest. Next, we have got the cess, entertainment and luxury tax, which has been completely subsumed under your GST regime. So in the state taxes, stamp duty, taxes on vehicle, your registration charges on vehicles, your taxes on electricity, it still remains with the state laws. It is yet to be covered under the GST part. And then the taxes which are levied by the local authorities, such as your octroi, entry tax, your local body tax, are also subsumed in GST now. So what has happened is, now we have got, with the center we have got CGST, with the states we have got SGST, with the union territories we have got UTGST instead of SGST. All the other taxes, it has got completely merged, or it has got absorbed in the GST regime. So if you look at the CGST, excise duty is subsumed, service tax is subsumed, special countervailing duty is subsumed, surcharges, cesses, and then your countervailing duty, and finally your medicinal excise duties are got consumed in CGST. All these were levied by central government earlier. Now it is again levied by the central government in the form of one tax called CGST. Now SGST, your state cesses, entertainment tax, luxury tax, VAT or sales tax, entry tax, octroi, purchase tax, taxes on lottery, betting and gambling, which were levied earlier by the state governments under various ordinances and acts. Each and everything is contrary to each other, confusing, complex. Now everything has brought under the concept of SGST now. How GST is made applicable? Now GST is applicable on all goods and services. The definition of goods and services, we will be seeing it later, except alcoholic beverages for consumption, human consumption, because it is covered by the State Excise Act. The petroleum and the petrol and the fire related products, the effective date will be notified later. Still it has not been notified for various reasons. The third point and fourth point I am not discussing now. Let me go to the fifth one, the common list of exemptions for CGST and SGST. See, the common exemption is common for both your center as well as for the state. Earlier, each and every state had a different law. Like now, one nation, one tax. So under this concept, the list is common across the entire state. And then the transactions which are below the threshold limit is also common across all the states now. Now, if you look at the global model of GST, we have got various models. The first model is national GST, where the taxes will be completely levied by the center, and the center will collect the taxes and give it back to the provinces or states. The states will not collect any tax in this regard. Such type of system is in USA. Sorry, it is in Australia and in China. State GST, where each and every states will be given powers to collect the taxes, and this system is in USA. The third one is non-current dual GST. In this non-concurrent dual GST, on goods state will collect, and on services center will collect. So this is again maybe it will lead to a lot of complications. What will be the composition of how many goods, how much will be the composition of services, what will be the revenue, all these will be very uncertain. And then we have got to the concurrent dual GST model. Taxes levied both by the center and state at a common agreed percentage, like our Brazil, Canada, and what we have adopted in India. Finally, we have the Quebec model. Under the Quebec model, separate legislation will be there for every state, provinces, and the tax collections, administrations, everything will happen with this respective province. It is similar to our older regime, but here only one tax will be there, but the administration will be completely done by the respective state or the provinces. So the important definitions under CGST. See, when you look at the important definitions, we have got around 121 definitions to be gone through under CGST, but all these definitions are common in CGST, SGST, so it doesn't make a difference, however we do. Before going into these definitions, let us see the arrangement of sections, how the chapterization is done. We have got around 21 chapters. For the intermediate level, I think up to 11 or 12 chapters are being covered in your syllabus. It starts with chapter 1 start with short title, commencement and definitions. We have got 121 definitions in the CGST Act. And then chapter 2 speaks about administration. Third chapter is on levy and collection of tax. How do you levy and how do you collect taxes? Chapter 4 and 5 are very, very important because they are the crux of this entire GST Act. Time and value of supply. Chapter 5 is on input tax credit. Chapter 6, 7, 8 deals with registration, issue of tax invoice, credit notes, debit notes, accounts and records. Chapter 9 and 10 goes together with returns and payment of taxes. And 11 is with refunds, and 12 is with assessment, and 13 is audit. See, all these are higher provisions which are dealt at the final level in professional courses. Now the first definition what I would start is with regard to the person. Section 2 subsection 84 of the CGST Act, like wherever the word bill is there, we can substitute with the word act, because now it has got passed in the parliament. Section 2 subsection 84 says a person. It includes an individual, an HUF, a company, a firm, a limited liability partnership. A firm means a partnership firm under the Indian Partnership Act of 1932. A limited liability partnership is again a corporate entity under the LLP Act. And then we have got association of persons and body of individuals, maybe incorporated or not. See, basically we call it as AOP and BOI. The difference between AOP and BOI is an association of person. Even an artificial person can be a member, whereas in a body of individuals, only individuals can be members to form the entity. And then a corporation established by an act of parliament, state legislature, provincial act, etc. And what is defined as per section 2 subsection 45 of the Companies Act, your statutory corporations. And then any body incorporated by or under the laws of a country outside the India. And then the cooperative society registered under any law relating to cooperative societies, either your central act or your state acts. And then your local authorities, municipality, corporation, panchayat, all these are local authorities. Central government and state government, for that matter, they are persons. The society registered under the Societies Act of 1860. Trust and any other artificial judicial person not falling within the above categories is covered under the residual provision. Now we'll discuss on the taxable person and the registered person. Who is a taxable person? who is registered under section 22 or section 24, who is registered or liable to be registered. So you fall under the compulsory category or your voluntary category, you have already registered under the GST Act. Yes, you are a taxable person. Now, who is a registered person? A person who has already got registered under section 25 of the Act, but it does not include a person to whom unique identification number, unique identity number, UAN is given, like to diplomats, your embassies, for them separate UAN number is given. So they are not covered under the registered person category. Now we will have to differentiate between goods and services, because the concept of goods and services is both together, it is included in GST. So what do you mean by goods? It means every kind of movable property other than money and securities. So any movable property, but money and securities are specifically excluded. And what is included? Specifically included auctionable claims. What are auctionable claims? We will refer again to the Transfer of Property Act of 1882, section 3. Growing crops, grass and things attached to and forming part of the land, which are agreed to be severed. Severed is detached, that is cut and harvested before supply or under a contract of supply. So the specific exclusion is what? Money and securities are exclusions. What are specific inclusions? Your auctionable claims, growing crops, grass and things which are attached to part of earth or forming a part of the land, but they can be detached or severed. Now what is an auctionable claim? It is a claim on any debt, but it does not include your mortgage of immovable property, hypothecation or pledge of movable property. Either you have the physical possession with you or constructive possession is there. So all that is being taken as per the Transfer of Property Act of 1882. Now we have seen what is a goods. Before going into supply, we will see what is a taxable supply, because the word purchase and sale is completely substituted with the word supply. See, what is a taxable supply? Section 2 subsection 108 of the CGST Act says taxable supply means a supply of goods or services or both which is leviable to tax under this Act. Which is leviable to tax. See, it is subject to GST. It can be a supply of goods or supply of services or both. Now, we have discussed about taxable supply. Now we will see what is supply. We will remove the word taxable. See, supply includes both your taxable and non-taxable. But now what is supply? All forms of supply of goods or services or both. It includes sale, transfer, barter, exchange, license, rent, lease, even disposal. Everything is covered under supply. But that supply has to be made for a consideration. It should be made for a consideration. For what? For the course of business or in the furtherance of business. See, the supply should be in the process of business or in incidental, ancillary, accidental, in supplement, in complement, whatever words you say, in furtherance of business. This furtherance of business we can talk for 4 hours, 4 to 5 hours. So the conditions are here. There should be a supply of goods or services or both. It should be for a consideration and it should be in the course of business or in the furtherance of business. This is supply. Now we will go to the definition of services. See, what would be services? Literally anything which is not a good will be a service. Anything which is not a service should be a goods. So other than goods, money and securities, because money and securities are literally excluded from goods as well as the services, but it includes any activities relating to the use of money or its conversion by cash or any other mode. They are talking about the foreign exchange, the currency conversion transactions here from one form to the other, or currency or denomination, or to any other form, currency or denomination. They should charge separate consideration, some commission or some consideration is charged for that transaction, then it becomes a service. Now address of delivery, it is similar to your shipping address in all your online transactions. So address of delivery is defined by section 2 subsection 2. It means address of the recipient of goods or services or both. What is indicated on the tax invoice? The tax invoice can be issued only by a registered person. See, a person who is not registered in GST cannot issue a tax invoice. It is an offence. It is a punishable offence with a fine of 25,000 rupees flat. So, it is issued by a registered person for the delivery of such goods or services or both. So, here the address of delivery is to whom the goods or services are delivered, or he being the recipient. Now, the place of supply, it is referred in chapter 5. It is a very detailed topic. The place of supply is different for certain transactions. So, we will be discussing that in a separate presentation. Now, what is consideration? No consideration, no contract. No, that is a basic maxim which we have learnt in all commercial laws. So, here in consideration in relation to a supply of goods or services are both. First one is in the positive side. The second aspect will be in the negative side. The first one, it says any payment made or to be made. That is, you have already made the payment or you are yet to make a payment. Your immediate transactions or credit transactions. The payment can be made in the form of money or it can be in otherwise, in any form. For what? Again, three junctures are given: in respect of, in response to, or for the inducement. So see these three words, in respect of supply, in response to supply, in inducement of supply. Again, supply of what? Goods or services or both. For whom? It can be for the recipient of goods or for any other person. See, the recipient need not be the payer of tax here. You can order goods for your friends. You can pay the money and tax, but the recipient is different. Like when you order your online gift for your friends on certain occasions, the billing address will be different and your shipping address will be different. So, but it does not include any subsidy given by the central government or state government. The next part of the definition says the monetary value of any act or forbearance is your tolerate not to do something, that is being away from something. For that, when you give a consideration, that is also covered under the term consideration. Now again, it can be in response to, in relation to, in respect of, in inducement of, again for supply of goods or services or both. Again, recipient does not matter here. Again, subsidy is kept out of the purview. So even if you give money for forbearance, for not doing something, that is also being covered under the term consideration now. But only one aspect what is being to be looked into here is the deposits, what we give for the business. Like when you take your agency business or your franchisee business, the deposit part, if it is refundable, it is not subject as consideration. If it is adjustable in the course of business, then it is subject to the term consideration. So the deposit depends whether it is refundable or it is adjustable. Now three terms: principal supply, composite supply and mixed supply. First, let me go from the bottom, the principal supply. Section 2 subsection 90 says it means a supply of goods or services which constitutes a predominant element. See, principal supply is always referred along with the composite supply. You supply a lot of goods together. It is naturally bundled. In composite supply, we cannot separate it, even if you separate it, it does not have any use. It is naturally bundled together. In that naturally bundled goods, what is a predominant element? What is the most identifiable element that becomes a predominant element? And all other supplies ancillary. Let us take the element as your thali meals. In the thali meals, your rice and other the primary items becomes most important. The other additional items, the soup, ice cream, what is given, it is a part of your meals. If you want, you take it, otherwise you ignore it. They will not cut down any cost. It is given as a bundle, naturally bundled supply here. So that is called as principal supply. So again the composite supply is it comprises of two or more supplies which are naturally bundled, and it is supplied in conjunction with each other. In conjunction with each other is in relation to each other in the ordinary course of business, and the rate which is applicable for the principal supply will be made applicable for the entire product. We will not have a separate no billing for each and every item in the product. See, when the thali meals is being billed, they will bill 150 rupees. Tax rate is 5% or 12%. They will not look into what is the tax rate for your additional items or ice cream. They will not look into that. So they will take it as a single commodity only. Now mixed supply is where you have got more individual supply or goods or combination. It is made in conjunction with each other by a taxable person, but here it is given for a single price where we can identify the rates. The highest rate will be made applicable for all the products. Like when you buy your mobile phone, you get your charger, your cables and other things together. So even in the bill they will mention it separately also. So here it is a concept of mixed supply where it is given as a package. Now we will go for the definition of related persons. Person shall be deemed to be related only if one is they are officers or directors of one other's business. Next one is they are legally recognized as partners. The third one is here the concept of employer-employee is brought in here as related parties. Next is any person directly or indirectly if they own 25% of the voting stock or shares or both together. Earlier the majority control was only 20%, now it is 25% here in GST. One of them or the other party is controlling on the others, so you become a related person. When you control a third party or when you are controlled by a third party, both the cases. And finally members of the same family, and it includes the legal persons of all the above mentioned categories, your legal representatives and legal heirs. If even your sole agency, so sole distributorship, all these they are deemed to be in related persons. Now the business vertical, the concept of business vertical is important because with the help of business vertical you can decide whether you want to proceed with a single registration or you want to have separate registration for business vertical. See, business vertical is it is a distinguishable component of an enterprise. Let me take the example of Wipro here. Wipro Limited is a single business entity. So Wipro BPO is a unit, Wipro Technologies is a unit, Wipro FMCG is a unit. So they are not separate legal entities, but they are part of Wipro Limited. They are divisions. So here each and every division is a business vertical. And the nature of product is different, the type of product is different, the risk is different, the returns are different, the production process or the operation mechanism is different, the classes of customers are different, and how the marketing strategies are used, they are different, and the laws which are governing each and every vertical is also different. So in those cases the business can decide if they want to have a common registration for the entire business vertical. Yes, for all the verticals they can have a single registration for one state. If they want, they can like what they can do. No, they can what to say. We can have different registrations for the business. Next is the follow of the input tax credits. When you say input tax credits, that is more important in your GST component. IGST input. What is this IGST? If you have incurred some tax in your inward supplies belonging to interstate trade or commerce, that is called as IGST. If you have paid some, when you have paid in some taxes on your inward supplies, that can be adjusted against the IGST output if available, then we can go for the CGST liability set off. Then we can go for the SGST liability. Next is CGST input. CGST input is a component of central and state and taxes. So where what happens here is CGST can be first set off against CGST output, and then with IGST, and then SGST can be set off with SGST and then IGST. See, CGST and SGST cross set off is not advisable. Now we will go for the definitions of the capital goods: input, service, inward supply and outward supply. What is capital goods? Capital goods, it means the assets which are capitalized in the books of accounts of the person who claims the tax credit on that assets, and those assets are to be used or intended to be used in the course of or in the furtherance of business. Now, input, see, other than capital goods, we call everything as inputs. So any goods which are used or intended to be used by the supplier in the course of furtherance of business. So again, the services which are incurred, like it is called as input services. Again, it should be used in the course and furtherance of business. Now, inward supply and outward supply, it is literally your inward supply is equal to your purchase or your availing of service. Our outward supply is equal to your sale or rendering of service. So inward supply is a receipt of goods or services, either by purchase, acquisition or any other means for any other consideration. For any consideration. Similarly, outward supply, it includes sale, transfer, barter, exchange, license, rental, lease or disposal of assets. See these terms, each and everything is related to either goods or services. Like your license, transfer of rights. Rental is transfer of your rights for use. Lease is again you transfer the right to use but not the ownership. All these are being covered under the services. Now, the next definition what we will study is how the goods are classified under the GST regime. See, goods are identified by HSN classification, harmonized system of nomenclature, we call it as HSN. The services are classified with regard to SAC code, services accounting code. HSN code is again 6 digit, again your SAC code is also 6 digit. To have uniformity in the classification of goods, we use this HSN classification or SAC classification. So I will deal with the other topics in subsequent presentations. I'll try to break into small units for half an hour or 45 minutes so that you can view repeated times, and you can refer to your materials, your barracks, so that you will get a very good idea. Thank you for your patience. Thank you.